When I talk to people out there that are investing in retail every day, they say to me, well, is it going to get any better than this? How can it get better than this? And I really believe that's what's weighing on these stocks. People look at it and say, okay, things were fabulous last year in the fourth quarter. Things were great in the first and second quarter. Can it really keep going? Can we have this kind of momentum continue? And they're saying to themselves, no. I'm saying to myself, yes.
You think so? So you're not, you know, we're very pithy here in the media, especially at this hour. So you're not buying into the peak retail theme?
I'm buying into the this is as good as it gets, but I think it could stay this good for a while. We've got 3.7% unemployment. We've got rising wages.
Yes.
We've got a 704 FICO score for the average citizen for the first time in history.
Wow.
The best it's ever been. People can spend, have the capacity to spend, and they're relatively happy if you believe everything but the politics and polling.
Okay. That said, I hear you, but I'm gonna say the most poignant thing that our viewers and listeners have heard all week, which is the stock market is not the economy. The economy can do one thing, but stocks can do whatever they want.
Well, I believe that.
You're telling me the economic story is good, but what do you think the stock story will be good? It hasn't the last couple of weeks.
I think the stock story will be good because I think people are concerned that 2019 won't be good, and I think they're wrong. I don't see anything going on with my consumer and my companies to make me believe that 2019 won't be strong just like 2018 has been strong and just like 4Q 2017 was strong. Something has to happen for retail not to be good next year. We have to see some problem with employment or some problem with wages. Something has to go wrong. And if something's going to go wrong, and they're smart enough that they figured that out, but they're not.
We're starting to see housing and even auto sales weaken a bit. And I say that in a positive way because you and I have talked about what we call the housing and the car and house indicator. When people buy houses and cars, they cut back on other spending because obviously it's expensive to buy those things. If they're slowing down on these big ticket things, could that be good news for the Macy's of the world?
It won't be bad news.
I'm not saving 50 grand for a down payment anymore. Let's go spend a little bit of this money.
Right. Something else has to happen to be bad for consumer-driven retail because that's all affected what you just described by interest rates.
Yeah.
My consumer is not affected by interest rates until something starts to weigh on the economy. If you believe
tariffs,
the Fed,
any indication that some of the tariffs, now not all tariffs have been slapped on yet, we got to remember that.
Right.
But any indication the one that we have are starting to negatively impact the consumer?
No. There's some indication we could see some compression in margin because of it, because we're not going to be able to pass it through. We already know that. So if it is a big problem, that's where it would start to weigh on the stocks.